Hi everyone! Today we're heading into a world where investing meets pop culture. Stampedes, sold-out drops in seconds, a quirky little character with pointy teeth sold for just $20 in blind boxes. But on the secondary market, some rare pieces fetch over $400. Welcome to the wild universe of POP MART. This Chinese company has turned collectible figurines into a global cultural phenomenon. And behind the viral drops, the frenzied fans, and the millions of hashtags lies a razor-sharp strategy. In this video, I'll break down how POP MART became a cultural retail star, and more importantly, whether its business model is truly built to last. We'll go over its story, business moves, financial highlights, and I'll give you my personal take on the stock. Is it an opportunity today, or should you stay on the sidelines? Quick disclaimer before we begin. This video is not financial advice. It's a detailed, rigorous breakdown of a real company. But in the end, you're responsible for your own investment decisions. So always do your own research before investing. Alright, let's dive into a world where investing meets hype. Let's go! Let's start by unpacking what POP MART really is, how the brand was born, how it took over the Asian landscape, and why its model is getting so much attention from investors. Beijing, 2010. A young entrepreneur named Wang Ning, fresh from the media world, sets out to build something new. The initial idea was simple: offer collectible figurines to young Chinese adults sold in blind boxes. That one mechanic, surprise, changed everything. You never know what you get, and that thrill became addictive. From the start, POP MART wasn't just selling products, it was selling anticipation. It didn't take long for the brand to explode. POP MART figurines spread like wildfire on Chinese social media, boosted by aesthetics, scarcity, and word of mouth. They weren't just toys anymore, they became style statements, emotional markers. At the core of POP MART's strategy are its IPs, intellectual properties. Characters like MOLLY or LABUBU aren't just mascots, they are mini-universes, designed to trigger attachment and replay value. And each new collection builds on that emotional bond. Unlike most brands that rely on distributors or third-party retailers, POP MART keeps full control. From the very beginning, it embraced a direct-to-consumer strategy, opening its own stores, running its own e-commerce, and managing every product drop internally. The result? Higher margins and complete mastery over the customer experience. In China's biggest cities, POP MART stores have become destinations, designed not just to sell, but to delight. And online, the company dominates platforms like Tmall, Xiaohongshu, and WeChat. Every interaction is calibrated, every click, every package, every drop, part of a controlled experience. In the toy industry, most brands license characters. That means sharing profits and giving up control. But POP MART chose a different path. POP MART fully controlled its distribution, thanks to a robust direct-to-consumer model. No middleman. But it also controls something even more valuable: its characters. The company doesn't just sell figurines, it owns the rights to its IPs, from visuals to names, stories, and merchandising. This means higher margins and the ability to expand these universes into games, fashion, animation, without asking anyone's permission. Design, materials, finishing, even quality control. Unlike most toy brands, POP MART keeps everything in-house. Their Pop Design Center isn't just a creative lab, it's the guardian of the brand's entire visual identity. Every curve, every color, every texture follows strict internal standards. POP MART doesn't just sell products, it sells belonging. And to make sure that feeling stays consistent, part of the production is handled in POP MART's own factory in the Guangdong region. POP MART's growth isn't just fueled by marketing, it's fueled by its fans. On platforms like Xiaohongshu, WeChat, or Bilibili, collectors proudly share their shelves, drawing their favorite characters, and post unboxing rituals like sacred events. Each drop is a moment, each collection has its codes. POP MART is thinking big. And it's not doing it alone. The brand feeds off the passion of its community and turns that passion into momentum. POP MART isn't stopping at toys. It's building a lifestyle brand with premium figurines, home decor, art collabs, and even immersive events. Its IPs now show up in café, concept stores, and digital experiences. Some characters have mobile games, others appear in fashion drops or branded attractions. The goal? To turn each universe into a full ecosystem and stretch the emotional bond beyond the shelf. Of course, it's not all smooth sailing. POP MART faces several structural risks. First, counterfeiting. As soon as a character goes viral, knockoffs flood the market, especially across Asia. Second, IP fatigue. The whole model relies on constant novelty. Without fresh designs or strong storytelling, interest can fade quickly. Then comes concentration risk. Over 75% of a company's revenue still comes from China, making it vulnerable to local shifts in demand or regulation. And finally, cultural volatility. Trends and trends move fast. What's viral today may be irrelevant tomorrow, and staying ahead of that curve is a constant challenge. In 2025, China introduced new restrictions on blind boxes, age limits, daily caps, and mandatory transparency on dropouts. Sure, there are risks, but the numbers tell another story. POP MART didn't just grow, it boomed. In just 7 years, revenue went from 0.16 billion to over 13 billion RMB, and 2024 was a turning point. Revenue jumped plus 107%. The rebound wasn't random, it came from viral IPs, better execution abroad, and the post-COVID demand surge in China. Behind this surge, solid fundamentals. First, gross margins, over 60%. Even during slowdowns, POP MART held the line, thanks to full control over design, production, and retail. Second, operational efficiency. Year after year, EBITDA margins stayed above 25%. proof that the business scaled without unnecessary overhead. And finally, profitability. In 2024, net income rose by 129%, and earnings per share also climbed sharply, though a bit slower due to post-IPO share dilution, from 1.15 to 1.38 billion shares. It's not just more sales, it's better sales with stronger margins and international traction. POP MART's balance sheet is extremely healthy, year after year. Gross debt, always under 1 billion RMB. Cash, nearly 10 billion. That's close to a third of its market cap. Net debt, deeply negative. But here's what's interesting. POP MART stays light. It owns just one production site in Guangdong and leases most of its stores. Physical assets remain modest, even as revenue and scale grow. But don't be fooled by the balance sheet. POP MART's real assets are intangible. Its IPs, its brand, its cultural reach. And under IFRS, none of that appears on the books. Let's talk cash, the lifeblood of any business. Growth means spending. More stores, more stock, more teams. POP MART's capex rose steadily, from 117 million RMB in 2019 to over 516 million RMB in 2024. But capital intensity stayed in check, just 4% of revenue last year. Meanwhile, free cash flow exploded, multiplying by 10 in 5 years, over 4.4 billion RMB in 2024. How? Efficiency operations, lean inventory, and fast turnover. POP MART doesn't just make money, it keeps it. That's the backbone of a scalable, resilient business. Return on equity tells a complex story for POP MART. Between 2017 and 2019, it soared from 2% to 76%, but that spike was driven by a very small equity base. After the IPO, the company's capital base grew and the return on equity dropped sharply. Now in 2023-2024, return on equity is bouncing back to 31% without leverage or dilution. This signals that POP MART is turning scale into sustainable profit. POP MART isn't your typical dividend stock. Since going public, it's focused on steady, thoughtful returns. Dividends have been modest but consistent, yielding around 0.3% at the current stock price. And in 2024, it bought back 4.7 million shares, worth around 78 million RMB. In short, a slow but steady shareholders' return policy, in line with its growth-first strategy. POP MART went public in late 2020, which means we don't have much historical perspective. Long-term trends are still hard to assess, and any valuation models should be treated with caution, especially given the stock's volatility. Since then, its stock has seen wild swings, but 2024 changed the game. The price jumped sixfold in a single year. Today, POP MART trades at nearly 100 times earnings. That's an extremely high multiple, even for a cultural brand with global potential. And it leaves little room for error. The momentum is real, but whether it's sustainable or not is a question we'll tackle in the conclusion. So where does POP MART really stand today? It's the story of a Chinese IP powerhouse, a company that mixes design, emotion, and cultural storytelling to build one of the most original retail strategies of the decade. From mystery boxes to global pop-up stores, from niche art toys to billion-yuan franchises, POP MART has created an entire ecosystem and turned fans into brand evangelists. From a business perspective, it's impressive. Strong margins, explosive growth, mountains of free cash flow, and a rock-solid balance sheet. The model is lean, scalable, and driven by proprietary IPs that resonate deeply with Gen Z, especially as characters like LABUBU now anchor global collaborations in fashion and music. The company is also branching out: a new jewelry line, mobile games, and an animated series show promising signs of ecosystem expansion. But the picture isn't flawless. The company still depends heavily on a few star IPs. Its diversification, while exciting, is still in early stages. And in 2025, new regulations in China targeted blind box mechanics, a core driver of sales. While parental purchases may offset part of the impact, the natural impulsiveness and repetition of teen-driven consumption will likely be harder to replicate under stricter controls. Above all, the current valuation is clearly pricing in perfection. Let's recap quickly. Strengths are powerful emotional attachment, especially among Gen Z, strong proprietary IPs with growing monetization, fully controlled, scalable, asset-light business model, exceptional profitability, EBITDA margin over 30%, free cash flow up 10x in 5 years, ultra-healthy balance sheet, nearly 9 billion RMB in net cash. And finally, accelerating international rollout. Though China still accounts for 75% of revenue. And weaknesses are heavy reliance on a handful of IPs, diversification beyond toys still limited, valuation extremely demanding, and regulatory constraints in China may limit impulsive purchasing behaviors among teens. Will I buy this stock today? Honestly, no. Not at this valuation. But it's a fascinating company to watch. If the hype cools off and the stock corrects, it might offer a much more attractive entry point. Because if POP MART succeeds in expanding its universe into fashion, gaming, lifestyle, or immersive content, then yes, it could evolve into a global cultural powerhouse. Thanks for sticking with this deep dive until the end. If you found this analysis useful, feel free to like, subscribe, and share this video. It really helps me to grow the channel. And let me know in the comments, would you invest in POP MART even at this high valuation? See you soon for another deep dive.